So first of all, we didn't find Ethereum. The reason we didn't find Ethereum is because we don't believe Ethereum should be an ETF without staking. There is 4% of staking yield right now on Ethereum. So we should go back to the shareholder, to the investors one way or another.
Hmm.
So for us, making an ETF on Solana without staking, we knew it will not be a great success.
This content is brought to you by Uphold, which is one of the top crypto platforms out there, which allows you to easily buy, sell, trade Bitcoin and the top altcoins in the market. Uphold lists 260 plus cryptocurrencies. They also allow you to trade precious metals such as gold, silver, palladium, and platinum. I've been a user of Uphold since 2018, so I can vouch for this platform. They have full transparency reports and they don't commingle or lend out your funds. They also have a great product called Vault, which is an assisted self-custody product. Vault allows you to maintain custody of your funds, and the keys are split. So Uphold holds one and you hold two. And if there's any issues, if you lose one of your keys, Uphold will help restore these keys and you can maintain access to your funds. It's 24/7 instant trading, it's trustless. So this is a great feature that can give you peace of mind where you don't have to worry about if you lose your private keys and much more. So if you'd like to learn more about Uphold, please visit the link in the description. Welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and with me today is Jean-Marie Mognetti, who's the CEO of CoinShares. Jean-Marie, great to have you on.
Thank you for having me, Tony.
Jean-Marie, I'm excited to chat with you. As we were discussing before the recording, I've been following CoinShares for a long time. I've known some folks who work there and excited to learn more about the business and your ETF and ETP business and so forth. But let's start with your background. Where are you from and what's your professional background?
Where I'm from, I was born in Paris, so I'm French. I started working in London. I started working in the community sector very early on in my career. My I study economics and statistics, so I'm a mathematician to some degree. I'm not a pure mathematician, but statistics and economics mix very well. And I went into commodities market as soon as I was out of university, and I left the commodity market for the crypto market in 2012, 2013, particularly.
Hmm. And what was your first encounter with Bitcoin and crypto? What was your aha moment?
Um, so funny enough, my business partner, Danny Masters, and I get two different encounters with Bitcoin, like him on the golf course and me in Hong Kong. And we come back from two trips and we talk about the same thing. So I was in Hong Kong. Hong Kong back in the day was kind of a very vibrant and epicenter of a lot of crypto early adopters. I was taken on a trip to Shenzhen to visit the mining facilities,
Hmm.
which was pretty rustic, I would say. And at that point, I don't really know what was Bitcoin or anything. And by the time I was back in Hong Kong, I was pulling up charts on my phone or on my laptop and trying to understand what it was. And when I saw the chart, as a commodity trader, I was like, well, that's exactly what oil used to be. It's patchy, it's illiquid, it trades in different venues. I know how to trade that. So my aha moment was first a trader moment, was like, okay, I know exactly how to trade that asset class. I did that before, so I know exactly what to do with it now. And then the kind of, I would say, the more deeper, profound transformational impact of crypto and Bitcoin more specifically came as a second derivative of me being much more interested in the trading aspects. So I started saying, okay, how do I mine a block? So we start mining block ourselves on a piece of paper to make sure we're understanding the entire, I would say, vertical of the business or the crypto ecosystem. And the more we're getting into it and going to the rabbit hole, the more we were kind of aspire by the entire. It's a massive vortex, and you can't get out. Once you get in,
Yeah.
it's finished. You never come back.
Are you blown away by the growth we've seen where going from mining in China, right? Where China eventually banned mining and the miners went to different parts of the world and the asset class has grown significantly. TradFi is here, launching ETFs and much more.
Look, if I'm honest, the mining facility I visited was like the it used to be called a mining farm. It was more a farm than a mining center. If you compare that to the facilities that Marathon and other company are running today, it's day and night. It's like
Oh,
it was basically a health and safety cause. I'm not even sure an insurance company would have dare knowing people were visiting these facilities, but because you get electric cable everywhere, you get exposed electricity cable. There was a water source next door. There was like leaking air conditioning. It was not at all a good look from a health and safety perspective. So yeah, we came along a massive way. Um, and it's great to see the industry maturing. It's great to see how the US requalifies himself in the mining race very, very quickly after banning it, and the China ban it as well. The politics around that is very, very interesting. But it's transforming fast, and the current presidential election race is showing that it's also a strong crystallization of attention.
And on the topic of China, I know they via Hong Kong have embraced crypto, right? Retail is allowed to trade it. They launch ETFs. They've opened up a lot of financing for Web3 and so forth. Do you have a prediction maybe of when mainland China may open up crypto to everybody? Maybe it's next year or a couple of years away.
Look, one thing is for sure. It's like nothing happened in Hong Kong today. I've been going to Hong Kong since 2005
Mm.
as a professional, and nothing happened in Hong Kong, and is even truer today than it was yesterday. So every single day passing, it become more and more true. Nothing is happening there without the central government of mainland China being in approval with the decision made by the local government.
Mm.
And all the, I would say, protests you see in Hong Kong are the illustration of the, I would say, non-alignment of some local population with the takeover from mainland China of Hong Kong, which used to be this kind of very cultural exception in the region. And so that's one thing. So the ETF launch, HKX launching the ETF, SFC in Hong Kong giving license to a few companies is definitely done with the right sense of approval, that there is some transforming of the thinking process in mainland China. At the same time, there has been a very big push for CBDC as well in mainland China, which started in a very targeted area where, notably around the red envelope period, which is a holiday in China where you give the red envelope as a thank you to the people you love. There was some airdrop effectively of red envelope done by the central government, which
Wow.
were able to be spent at specific facilities and not others. So the kind of programmability of money through CBDC is being tested at a large scale in certain administrative region within mainland China,
Mm.
are probably going to be rolled out. You can see how CBDC is also a very key component for the soft power of China abroad. The convertibility of the yuan is always been a problem. The CBDC is kind of sorting this problem, and they can start making loan and central bank swaps through CBDC as well. So there's plenty of like dynamic happening. So when it comes to Bitcoin specifically, Bitcoin has been used a lot in the past as a way to, I would say, move capital out of mainland China into the rest of the world, and almost create an offshore situation. So there is a bit of I think PTSD from the central government there. So the question is like how they're going to get comfortable with Bitcoin. I think the time where Bitcoin was fully anonymous is far behind us, rightly or wrongly. All the Samurai wallet, all the kind of mixer services are being shut down one by one and removed from the grid one by one. There's always a new one, but there's this kind of wheel to start effectively having a much cleaner understanding of who is moving money where, assuming you consider it to be money. So that's in the US. In Europe, Mika is also cleaning up the act massively around that stuff. And so you probably expect the same thing happening in China and in Asia, which will allow Bitcoin to be much more acceptable from a government perspective, effectively. And then you layer that with all the big company which are specialized in forensic analysis on the blockchain itself. And you really have something which is not anonymous at all or pseudo-anonymous. You really have a very transparent situation. And the simple fact that Russell Brand was arrested, on Silk Road very quickly, just show you that it's more a myth than a reality. So I think the government just need to get comfortable how it needs to be used to be able to move forward.
Those are great points. And as you're saying that, I thought of maybe that's why we've had this knee-jerk reaction against crypto globally. Initially, it's starting to open up, right? Where, to your point, KYC, AML, they also want to know where is currency being moved, because when you have control of fiat currency and you're pulling the levers to control the economy, if people are putting their money in stablecoins or Bitcoin and they're moving it out of the country and so forth, I can see how the world governments are like, wait. We need to know where the capital is going. We want to tax this. So now that these rules and regulations are coming into place, China being an example, they will eventually open up as they get a view of where the money's going.
Look, you're absolutely right on that front. I think there is a trend toward more KYC, more AML. If you look at the central exchanges, a lot of them were no KYC, no AML just 5 years ago. You want to open an account today at Binance or Bitfinex, it is more difficult to open an account than to open a bank account by the amount of KYC they're asking you. So we went from very little and in some case nothing to something which is very, very, I would say, stringent and echoing the traditional financial industry effectively, but almost overplaying it because it has been so tainted as not doing it that they went too far in some degree. So as usual, the pendulums overswing all the time and need to find its equilibrium at the end. So we are in the overswinging phase on the KYC and AML story. And what is funny is, like, as you see the KYC and AML story being implemented in centralized crypto, like all the centralized exchange, I would say takeover or the takeoff of all the DeFi protocol was mainly driven by the absence of AML and KYC.
Mm-hmm.
And CoinShares as a company has been very active in DeFi in the early years of DeFi. We've been looking at it very, very closely. And we also look at how do we think about asset management with a DeFi angle. And we created our own kind of R&D project called Shepherd. And Shepherd is an asset manager online, which is running on Base, on BNB, on Binance Chain, and a few chain. But Shepherd has its own token, which is called the Wool. Obviously, our dev team is very farming oriented. And the funny stuff there is, like, because we're an asset manager, because we're regulated in many, many ways in Europe, in the US, in Switzerland, like, we just look at that, say, okay, we can't not do it without KYC and AML at the gates. So we need to do it as if we were running that properly. Mm-hmm. The moment you put KYC and AML on DeFi, nobody's interested. So again, the same way a lot of exchanges died, if you look at BitMEX volume pre and post KYC, it went dramatically low. If you look at I don't remember the name of his exchange on top of my head, which was acquired by Justin Sun, who went from a lot of volume to no volume because the KYC and AML was put in place. So it's always the same story. So DeFi is getting into this moment now where, we saw yesterday Lido, which has been for a long time no KYC, is now thinking about, how do I create an institutional offering for liquid staking and so on. So there is things moving, but yes, it's not making people happy because that's not the spirit of crypto. There is a very strong libertarian spirit. We saw it in Nashville last week. There's a strong will for absolute freedom and no requirement. Unfortunately, if we wanted to scale, I don't think you would scale without control or some form of control. And people say, government are freaking out. What defines a nation, is this flag, but the currency is a big part of it. So if they lose control of the currency, it's become a big problem. So there is a will to just put it back into the right, I would say, rail to some degree. But It is a fantastic invention. It is a fantastic creation. It's trading down today. I can see on your chart behind you, but
Mhm.
it's we just need to make sure that it's done properly so it can keep scaling. What we need to be sure, to be sure, is like the cryptocurrency industry is not being killed by a regulatory framework which will not be appropriate. It's not so. So the key point is not no regulation, is the right regulation. And sometime where we are at risk is like the regulation is written by people who are not understanding the technology, who didn't do their homeworks, deep enough to understand what they're trying to regulate, and they just regulate by proxy. Say, oh well, that's like an equity stock or a security, and it's much more complex than that. So we just need to make sure that the regulation is written at the light of the technology progress and what is enable it as well in terms of growth, in terms of GDP growth, in terms of employment, in terms of all this kind of stuff. So there is a full industry running on that, and there is a lot of money which has been invested. There's a lot of fiduciary duty just by the simple fact of how much is the price of Bitcoin or Ethereum. So nothing can be done in a careless manner, and fiduciary duty is at the center, and that's one of the core value of CoinShare.
So you mentioned CoinShare has some DeFi products. Tell us a bit more about the company, like your total assets under management, different products and services you offer.
Yeah. So just to be clear, the DeFi project is a DeFi project. It's a kind of R&D project. It's not something we commercialize. It's more something, we want to make sure we stay aware of how the industry is moving. So as we don't like end up waking up in 3 years' time saying, oh, we didn't think about that. So it's more like how do we stay relevant by keeping our hands dirty and in the weeds of the technology and not just like being observer.
Hmm.
So just to clarify. So CoinShare today is an asset management company. Or an investment management company. We are headquartered in Jersey, the old one. I know you're in New Jersey, so we're in old Jersey in the between France and the UK. That's our headquarters. We have offices in London, Paris, and New York. And the company is managing around $6 to $7 billion of money for our client, depending on the price of Bitcoin, the price of Ethereum. But out of that, we manage about $1 billion of crypto-related equity. So we own mining stock, we own ASICs manufacturer. Like we have a big ETF program around all the crypto vertical, and we are building that. So we are a big investor in mining companies through WGMI, which is our US Bitcoin ETF for mining, specialized in mining. So it's an asset management company specialized in crypto. Our know-how come from crypto. We have product for clients which are working with us. We have a capital market desk which has been around since 2014, and we are slowly but surely rebuilding our hedge fund business so that we can start offering, now that the beta element is allowed, even in the US, we can start offering some alpha solution to clients.
Yeah, and I noticed some of your great products. And in the U, and I know in the EU, you guys call it ETPs.
Yeah.
In the United States, we call it ETFs. As far as ETPs, you have Bitcoin, Ethereum. Do you have others? I know in the EU, there's more clarity. So
Yeah, we have 19. I think we have 19 in total in Europe. So we have 19 coins. They are listed on the German stock exchange called Xetra. They are listing in Switzerland on SIX. They are listed in Paris and Amsterdam on Euronext.
wow.
We are waiting to list when the regulatory landscape change on Borsa Italiana in Milan and in London Stock Exchange in London. And finally, we have product listed on Nasdaq OMX, which is the Nordic version of Nasdaq for the Scandinavia area.
And then there was a recent acquisition of Valkyrie's fund business here in the United States. Tell us about that acquisition and the goal.
Yeah, so funny enough, I've been speaking with analysts for years and telling them we will not do an ETF in the US because there is no point doing it. We don't have a distribution channel. We don't want to keep paying legal fees for paying legal fees. There is no clear, I would say, end date for the SEC to approve this ETF. So, the only people making money seems to be the law firm. So let's not waste our time and let's focus on what we do. So we didn't spend. So we spent, I think, the first application for Bitcoin ETF was done in the US by the Winklevoss brother back in 2014. It's actually quite sad that they're not on the finish line, because at some point they also give up and say, whatever, I'm not going to keep paying legal bills, probably for nothing. And we focus on Europe. We say, well, there's no point for us to just do this American stuff right now. And the way we say we'll come to the US, because we still have a global ambition, say, okay, we have a broker dealer. We're going to extend our broker dealer into every single state, so we're able to market and distribute in every single state. But the stuff we're going to sell is going to be our hedge fund solution business, which is very different from what other people have. So we can create a differentiating factor. That was done. But as we were doing that, Valkyrie came around, and it was, I would say, an opportunity we couldn't say no to. It would have been impossible to justify not saying yes. So we just decided to move on with this acquisition and integrate it in our business. It brings us an IRA platform. It brings us a 33 Act ETF and a 40 Act as well. So it's kind of a lot of regulatory framework it brings us and allow us to start competing and playing. The interesting things for us, it also brings an interesting ETF called WGMI, which is we're going to make it, which is this mining specialized ETF, which is quite unique in the world. There is no, I don't think to my knowledge there's a single product like this around the world. So we see a lot of potential in that kind of thing. And finally, there was a Bitcoin spot ETF application with a very good ticker, which is BRRR. So for anybody who have seen the meme of the money printer going out of control, they will get it. But we quite like the kind of overlay of the meme culture with the asset management franchise. It was a good way to differentiate ourselves and to speak to retail and to speak to investors in a very different way than we would speak normally. Our European business is all, on the contrary, very, very bottom up. So having a bit of a funnier way to get in the US and to differentiate ourselves, the very bottom up people in the US are BlackRock and Fidelity. So we can't be bottom up this way. So we say, okay, well, let's do something a bit different while staying very professional in our approach.
Yeah, and so a follow-up question on, the meme culture and the way investors and retail investors approach things in this time and era. You have social media, and we've seen that people have crowded together to do GameStop and go against different folks. It's like a whole new world of investing. What are your thoughts on that? And is it, to your point, maybe it's not to be so buttoned up, but you have to meet the retail investors at where they're at?
Well, I think what the technology has created a capacity for investors to be everywhere. And for investors to invest from everywhere. But at the same time, they basically have a span of attention which is limited to the screen of their phone. And so you have to go meet the investor where they are. They're not anymore in a conference room, or at least not the mass of them. They're not anymore, for a lot of them, in an office anymore. They just work from home, especially in the US. There's a lot of working from home, in a wider sense than in Europe. And they're much more diverse. They have very different aspiration of what they want to consume. And so you have to just connect with them with the way they connect with you the best, and there was a lot of, this kind of social investment, where you just with the Wall Street bet and all this kind of stuff, which was kind of one incarnation of that. But you get a company now which are very much influencer driven and kind of leadership driven. Say, okay, I follow this guy, so I want to copy him in the way I trade. It has its pro and its cons. The SEC is watching that very carefully, because obviously it is down to stock manipulation. It is down to a lot of bad practice. So it's a question of how do we use the meme culture as a good vector to connect with our audience whilst bringing the sophistication and the professionalism of traditional asset management. So it's not so it can be done in a complete degen way, to use a famous term, but we're trying to do it in a very kind of grown-up way and say, okay, we understand the technology, we understand where our consumers are and how we can address them. The question is, how do we connect the dots? and make sure we're bringing the best of both worlds into one place and not just abuse the system. As we can see, the SEC issued some fine already this year to some influencer for bad use of social networks. So it's a question of doing it the right way.
Yeah, absolutely. I'd love to get your take on the difference between the ETP market in the EU versus the United States. Is it very different? Is it there's more capital in the US? What are some of the nuances?
So in general, let alone crypto, so we in the general world, the US ETF market slash ETP market is all part of the same family. Is 10 times bigger in the US than Europe. At the same time, 50% of the entire AUM in the world is based in the US. So the matrix is normal. I think the key differentiation between the US and Europe is much more in terms of like target addressable audience or target addressable market, which is much wider in the US and much less fragmented in the US than it is in Europe. If you go in Europe, you need to have a messaging very different if you speak to a German investor than an Italian investor than a French one, and they don't consume the same way, they don't consume the same channels, they don't receive the same messaging, they don't speak the same language. So it's like a lot of like differentiation, which make your cost of acquisition goes up pretty much very, very high. I actually, in terms of asset management term, the most expensive market for cost of acquisition is France globally, because the cost of acquisition is high and the turnover is high as well. So it's like every asset manager in the world outside of crypto always look at France as this kind of very complicated market to address because of the way. And then you have also the kind of psychology which come into play, because depending how the state is handling your pension, you have a different incentive to invest. So in a market like France, for instance, where the government is taking care of everything and you're just a passenger, people don't have the natural taste for investing because they're not trained into it. They just do real estate because their parents told them to buy a flat. Whereas in Germany, because you have a much more bigger part of your self-directed investment for your pension, then you just like start trading very early on and making investment decisions very early on in your life. Same thing in the UK, same thing in Scandinavia. So it's a very different market, very different niche and model. So it ends up being a much bigger lift for less AUM in Europe. In the US, you get one regulator or two regulator, I would say, or agencies. Then you can distribute, subject to having the right license, throughout the US. And then you really have like a marketing strategy, which is, I would say, split into two, which would be the coast versus the non-coastal area. And that's kind of like going to be different model of distribution, depending of like, which would be direct distribution, which would be much more socially driven versus like much more intermediary driven distribution model. So and I think the last point is which I happened to discover, especially with Valkyrie Acquisition, is like Europe has been completely paralyzed in terms of data science by GDPR, which is the Data Protection Act. And in some way it's good, in some way it's bad, because it's always, as we were discussing earlier, it's like how far is too far. And in Europe, it went to a point where you can't innovate. While in the US, it's maybe too far, but the amount of data available to start doing something and to be able to target audience and to make sure you are spending the dollars at the right place, it's incredible, the breadth of data which is available. So two different model. We used to say, laughing, that America innovate, Asia copy, and France or Europe regulate. That's kind of seems to be the case this time again in crypto.
That's great insight and really great perspective. Now, with regards to the different ETFs in the United States, we have Bitcoin, we have Ethereum just launched last week, of course. Some folks have started filing for Solana. However, in the United States, the process has been you have to have a futures market first. What are your plans around Solana, if any?
So first of all, we didn't file Ethereum. The reason we didn't file Ethereum is because we don't believe Ethereum should be an ETF without staking. There is 4% of staking yield right now on Ethereum. So this should go back to the shareholder, to the investors one way or another. So for us, making an ETF on Solana without staking, we knew it will not be a great success. There is no way people in 2024 will pass on the staking component. So it was like, yeah, it's kind of not aligned with our value. If we can do to staking, we would file. Without staking, no, thank you.
That's a
Solana will have the same. Solana will have the same situation, by the way, and the same issue. Now, I think the Solana, don't forget, crypto is a very PR-driven market. The crypto Twitter is a very strong, tool, and the marketing stunt of finding another S1 is just a market, and say you were the first one is a good PR gimmick, but I don't think it has any kind of leg right now.
No, that's a great point, and I've been talking to some people about this as well. I hold Ethereum directly, I self-custody, but for the folks out there outside of Bitcoin, I don't see why I would want to invest in Ethereum if I don't have the staking component, right? I don't benefit in the rewards, which is a big part of why ETH exists as a software layer where you can build things on, but the staking component.
Well, like we always talk about Bitcoin as digital gold, which sometimes a limitation of its true virtue, but it's a good introduction to it at least. And what is always forgotten when we talk about ETH is like it's a tech stock, and like if you remove the tech component of it, it's like ETH doesn't have the virtue of Bitcoin, so not having the staking component on it is like a big downside to me. So I think it's a mistake. I would say the merit of our ETP, like CoinShares ETP in Europe on ETH, is like even if you are buying one share, you will be able to stake it through the product. While if you buy one ETH and not 32, it's very difficult to stake it properly unless you are giving away the risk to someone else and become just a passenger of a liquid staking program, which is another piling up of risk. So that's the beauty of it. And then there's some tax advantages for us. In Europe, for instance, we make sure that all our products are built in a tax advantageous situation for our investors, because the taxation of this stuff can be very costly if it's not done properly. So we just focus a lot on that as well to help our clients.
Quick follow-up question on the Ethereum staking ETF in Europe. How are the rewards paid out? Is it like a monthly thing, and can people withdraw that, or
No,
they
so
compound?
it's a very good question here, actually. So we have to be careful because an ETP is not a stock, and so there is a very limited number of corporate events like a dividend an ETP can do. So an ETP, for instance, can't pay a dividend, because if you were to pay a dividend in an ETP program, you will break the legal wrapper tax benefit. So you have to make sure you're doing it in a way which is tax advantageous, and like think about the consequences of the decision you're making and how you do it. So the way we're doing it is, instead of like creating a deflation by the fees, we're creating a reflation by the fees. So we say, okay, for next year, we know we are projecting the staking to be, let's say, 3% or 4%, and we're going to every day effectively inflate the coin entitlement of every shares by effectively 4 over 365, so as you can get a bit of the, effectively for every day you hold the ETPs, you have a little bit of the staking accruing towards you through a reflation of your coin entitlement.
It's interesting because I was thinking about that, how it would work in the United States, but that's a fascinating way. I mean, I'm assuming it might be similar in the US if they.
I think again, look, I'm not a US securities lawyer by any way, so don't take my words for granted. But I'm like, the way we think about it is like, if you can make a fees, which is a negative number, well, to make a number positive, you make a double negative and it become positive. So we just change the sign, the formula, and it was just and it works. So it's kind of the idea. We look at it, say, okay, well, we just need to be a bit imaginative with the formula, effectively, and add another component into it, and that works very well.
Yeah, that definitely makes sense. What's on the remainder of your 2024 roadmap?
look, we're not at will to speak too much about our roadmap because we're a listed company.
Sure.
But we are the way we think about the industry in general is like there is a lot of internal growth capacity for CoinShare in the market, whether it's in the US or in Europe. And then we are also very, very focused on external growth. Valkyrie was a good illustration of our capacity to roll up industry, I would say, non-performing asset and turn them into performing ones. And that's the same thing we're looking at with a number of other companies. A lot of these asset management company in crypto has been seeded by VC money, has been built on a lot of, I would say, cash being burned, but we're never very much focused on profitability. And if you're not profitable as a company with Bitcoin at $60,000, what would be the price you're going to be profitable? 200. So at some point, it become a profitability game, and investors are becoming tired of like subventioning a business for not being profitable. So we build a profitable business. We have solid margin. We can integrate. We can cut cost of all the provider we can acquire, and move that strictly down to our bottom line. So we want to look at this kind of opportunity to grow and be the consolidator of the industry if there is an opportunity for it.
That's really great. And I want to get your take on the crypto market at large. Not financial advice, but what's your outlook for the remainder of this bull market cycle? Do you see the market continue to grow into 2025?
Oh, look, the market is going to continue to grow. It's just the beginning. At the moment, you get a strong, I would say, especially in the US, a strong Republican drum roll around crypto. Our friend at Messari have become politician. Our friend at Galaxy are also becoming politician. Everybody is becoming a politician in the US right now. And it's fine. We need to make sure crypto is defended the right way and people are doing what it's supposed to be. What I'm worried about is like I wouldn't want crypto to be the attribute of one political camp. I would like to see crypto remain bipartisan, remain above party and beyond parties. It shouldn't be like the attribute of the Republican or the Democrat. So, look, I think ultimately we're going to see the Democrat camp coming up with a pro-crypto speech. It's a matter of weeks or if not days. They can't just let the Republican run with it. So I think it's sort of it's crazy to me they will let that happen.
Yeah.
So we'll see. They probably distance themselves from some SEC members and start showing some different stands. Ultimately, I'm pretty sure you will see crypto regulation happening in the US in the first half of 2025. Probably faster on the Republican government or administration than Democrat, based on the promises made on Saturday in Nashville. There was some very strong messaging in this allocation in Nashville, like moving all the safe Bitcoin to the balance sheet of the Fed. That's pretty strong. I don't know if you heard also Howard Lutnick, CEO of Cantor Fitzgerald, speaking. It was a very strong speech. There is a lot of good stuff which are happening, a lot of transformation. All the banks, despite their stance, are working on it at size and doing stuff. So the mining industry is like, accelerating. There is a bit of an AI/confusion around Bitcoin miner right now, but there's still a lot of good things happening. So net, I think we're really in the first innings of this process. We're not at all. Sorry, it's cricket, so I shouldn't use a cricket metaphor for an American podcast, but like I don't have the football right analogy. I think it's second and third or something like that. But anyway, we just on the we're just in the very first part of the game here. We need to keep moving, but we need to keep working, and like keep being focused on execution. That's kind of CoinShare narrative and CoinShare. I would say values. Like we have been very, very focused on execution. CoinShare is a small team; it's 100 people across the globe, so we're not like 600 or whatever number. We're very small. So on that basis, a lot of people are focused on execution and don't really spend time, doing other stuff than just moving the company forward.
With regards to Bitcoin, and you mentioned like Donald Trump, RFK Jr., they mentioned having Bitcoin as a reserve asset for the Fed and so
Mhm.
forth. You kind of have this growing adoption where companies are putting Bitcoin in their balance sheet as a treasury reserve asset. Presidential candidates are suggesting it. And then you have the ETFs. Are we seeing hyper Bitcoinization, where we're hitting that tipping point of mass adoption?
Yeah, look, I think I call Bitcoin an hyper micro asset anyway. So it's a perfect hyper micro asset. It has like capacity to trade 24/7. It has a very good resistance to censorship and anything like this. So it's a perfect asset to have on your balance sheet. People are telling me all the time, "Oh, the price of my flat keep going up." Say, that's not the price of your flat going up; it's the price of your dollar going down.
Yeah.
So it's the price of the bricks around your house is still the same brick, so it's not a golden brick. So uh, so people forget that they kind of don't realize that every 25 years your buying power divide by two at this little game. So we just need to understand that there is a way. There is if you were to look at a lot of stock markets and rebase them in Bitcoin, it's very interesting to look at how the performance looks very, very different.
Mm.
So look, having Bitcoin on your balance sheet, it's a natural thing to do. There has been a lot of demand for that from investors. You can see, like you look at Meta Planet in Japan, the stock completely rallied on the back of that, which was kind of surprising. Um, if you look at MicroStrategy, MicroStrategy has a very, I would say, $200 million software business, but despite that, it's trading at 2 times book value, which is basically Bitcoin. So
Yeah.
why? There's plenty of questions to ask there in terms of like the exuberance, which are sometimes being exposed, but it's going to normalize. Stocks are trading, for a long, long time at an overvalued price, and for a long, long time at an undervalued price, and we're a little bit for a lot of this American stock in the overvalue phase, and it's going to normalize. But having Bitcoin on your balance sheet is not the worst things to do. As a matter of fact, the CoinShares research on that topic is suggesting to have between 3 and 4% of your net worth in Bitcoin as a portfolio allocation theory to diversify your risk. And it doesn't really matter how much point you're putting. Having just a little always improve your risk adjusted return. So
Mm.
that's a question of how much is enough for you, but any number is better than no number.
Yeah, absolutely. I'd love to get your take on tokenization. A lot of big companies like BlackRock and so forth are starting to tokenize. Many of them are doing it on Ethereum, and they're putting treasuries, funds, and eventually there's talks about putting real estate and other types of commodities on there. What are your thoughts on the tokenization movement?
Look, tokenization is a very interesting thing for a very, like when you look at the financial backbone in the US or in Europe, it's pretty dated. It's pretty slow. We recently moved to T+1 settlement in the US on some securities. Um, you send cash, it takes 24 hours, if not more. Everything is a little bit slow.
Mm.
And the cost of the slowliness of the cost, it creates friction, it creates inefficiency, it creates arbitrage, it creates financing cost, and create plenty of costs associated with it. And it creates friction because you get plenty of people moving stuff from A to B. They don't even know what's moving from A to B. They just happen to know someone told them it has to move from A to B.
Mm.
And some bank I was speaking with, funny enough, have done this exercise to tokenize a bond. And before they did the bond tokenization, they went through every single step they have to do internally to get to the bond issuance. And they were struggling to figuring out why they were doing some stuff on the process
Mm.
because it was not documented. And the people who were doing this little part of the job were not remembering why they were supposed to do it this way. They've just been told that the way it is done. So it is a unique opportunity, thanks to technology, to transform the way you consume financial services. It's also the way to turbocharge distribution because the cost of innovation become cheaper. The cost of distributing to more and more people become cheaper. So your target addressable market become much wider because now fractioning stocks become an easy stuff. making a smaller product accessible to more people. Settlement become faster. You can have that on your phone anywhere. It become a real no-brainer. And then the cost of financing becomes much cheaper. So, all in all, imagine you can borrow money not for 24 hours, but like for 4 minutes or for 8 minutes or for whatever increment of time you want. Well, if you have a money market fund tokenized, that's theoretically what you should be able to do. You should be able to buy effectively the free rate for a specific amount of time. And not just for a fixed unit of 1 day or something like that. So you should be able to create the right cost. If you were to, imagine you buy a building which is very expensive, so as a number makes sense, and you are closing the transaction at 5 o'clock tonight. The money is wired, but you pay the entire financing of a full day. Was you really need the financing for 5 hours? Is great for the bank, not so great for you. So it's just kind of improve as well the velocity of money, the speed of the speed of turning around the money improve. So all in all, there's a lot of good things to say about tokenization. It's time the financial industry is being changed. It is a big I would say piece of architecture to go after. It's not like a small infrastructure play.
Right.
The Silicon Valley, for instance, used to disrupt a lot of industries. They did the taxi industry. They did, Amazon did a lot of, but like this one is like the financial one is a bit of a tricky one, along with the insurance one, because you're really touching at people's savings. You're touching at people's money. The fiduciary duty of JP Morgan is very different from the fiduciary duty than Uber, I would say. So we can see how touching this infrastructure stack is a much sensitive topic, and that's going to raise as well some question around key governance, encryption governance, cryptographic governance, because right now, for instance, you will have for instance, let's look at Ledger, the security company. It's a French security company. Will we be happy as well? If I'm a French bank, I would be very happy to use Ledger because it's a French technology, but am I happy as an American bank to use Ledger? Probably not, because you're going to say, well, I want to get supranational protection above my cryptography infrastructure. So who is your champion locally? And so you get this kind of plenty of questions which are raised around, okay, how do you conserve your independence when it comes to cryptography? And how do you make sure you're not like selling that to some foreign countries and becoming dependent on them? So it's not a simple, oh yeah, we just take this technology and we implement it here. It's like, okay, well, we need to think a bit longer term and say, okay, how do we preserve national independence effectively through this reinvention of the financial infrastructure tech stack? So not a simple game, not a game for the next minute, but people forget Amazon is 30 years old, and yeah, they have planes today, but when they started, it was in a garage. And the same way, like crypto is like Bitcoin is like not even born yet. It's like a very young asset. 2009 looks to be yesterday, and so there's plenty more to do.
Yeah, absolutely. And then, on the note of tokenization, obviously stable coins have been on the rise. You got USDT, USDC, and a lot of other players are coming into the market. PayPal, the folks at Van Eck recently launched a stable coin, AUSD, I believe it's called, and Ripple is going to launch a stable coin. So it seems like there's going to be a lot of tokenized dollars and euro as well coming up.
Yeah, look, everybody's looking at it. Everybody thinks they have a different edge. How many stablecoin do you need is a finite question, but with an infinite answer. I don't really know who is going to be the winner. Clearly, Tether is addressing a very specific need in the market. People in the US don't need Tether, but people in Argentina or Venezuela or or El Salvador, or even in Africa need Tether. It is creating a lot of servicing in this kind of economy. So USDC is a great solution, but again, how decentralized it is, how much risk is being taken, people don't know. Look, it's it's an evolving industry. There will be more, we saw some damage in 2022. There will be more accident as we keep improving and transforming and changing. But I think we are all kind of looking at it with open eyes and trying to avoid mistakes. So,
Yeah.
we need space for innovation. The same way Ethereum was created because there was not enough innovation on Bitcoin. The same way Solana was created because Ethereum was too big to innovate fast enough.
Right.
The stable coin are following the same principle of like, oh yeah, I can do it better. So great, but Tether today, $120 billion is probably the 15 biggest creditor of the United States of America in terms of treasury holding. It's a big player. They can't just like play and do whatever they think is a good idea. They just need to make sure that whatever they touch, they do it consciously and respectfully of their note holder, which you're doing, I think, to date a great job. And Cantor's speech on that was quite interesting as well.
Jean-Marie, I got some wrap-up questions here for you. The first is, if you could create your own metaverse, what would the theme be?
Education.
And some rapid fire questions. Favorite food?
Oh, I'm a foodie. Come on. So, okay, New York. Best toasty dead rabbit, pasta R2C. I'm French, so escargot at Balthazar, and probably because it's the US, best burger is Minute at Tavern.
And favorite musician or band?
Very eclectic taste. So from Puccini to Carl Cox, no problem.
Favorite movie?
Favorite movie, Kill Bill and probably Matrix.
Oh yeah. Favorite book?
Human Comedy, Balzac, French author, which influenced Dickens.
And when you're not working at CoinShares, what are you doing for fun?
These days, I play a lot of backgammon, funny enough.
Jean-Marie, pleasure chatting with you. Excited for the future updates around CoinShares. Thank you so much for joining me.
Thank you, Tony. See you soon. Bye-bye.